Trend analysis with candlestick signals becomes much more effective just because of the visual graphics. Notice our morning star signal. A big down day, a day of indecision, a day that closes on the third day more than halfway up this candle. And look at our T-line, our very effective trend and analytical tool. Then after the morning star signal, we have a doji sandwich, a big bullish day, a day of indecision, a doji, and then another big bullish day with the doji sandwiched in between, which implies there's going to be more upside. Once the uptrend is in progress, it becomes a very simple analysis. We can stay long as it continues to trade above the T-line, this black 8 exponential moving average, until we see a sell signal and a close back below the T-line. Notice what happened on our analysis when it got to the 50-day moving average. It did a doji. There's a simple rule of the doji. Prices are usually going to move in the direction of how they open after a doji. The positive trading the next day told us they were going to move positive because of the doji rule, number one. And number two, it told us the 50-day moving average was not going to act as resistance. The same analysis could be used on the S&P 500. Morning star type signal, a left-right combo, which is a doji followed by a bullish engulfing signal, a close above the T-line. Once we got up to the up here to the 50-day moving average, it did a doji. Then today it opened positive and trade positive, telling us the 50-day moving average was not likely going to be the resistance level. That makes our next target the 200-day moving average. And the NASDAQ, after it did a big left-right combo with the same type of pattern, closing above the T-line, notice what the T-line has been doing. Each day the NASDAQ comes down and tests the T-line and bounces back up, still making for the prospect of another positive day tomorrow, with the 50-day moving average being the next likely target. And if it breaks through there, it becomes the 200. So the implication right now is there's still at least one more day of upside, and maybe even more. Knowing what the trend of the market is, and what are strong buy signals, like our recommendation recently on Wynn Resorts, when it did a kicker signal back up through the T-line. Notice the gap up. Notice how it opened here and closed here, creating a dark candle or a red candle. Next day they gapped it up at or above the previous day's open and went the opposite direction. That's your kicker signal. How long do we stay in this position? Until we see a candlestick sell signal or a close below the T-line. But we can preempt that by, if we see the price move up to the 50-day moving average, which is the next likely target, and we go to our intraday charts, the 10-minute chart, and start seeing weakness on the 10-minute chart, that would be a good place to take profits. Why? Because we're going to see graphically where everybody else is planning to take profits. Again, this is not rocket science. This is just the graphic depiction of what goes on in human nature, and it allows us to analyze a trend with the same accuracy as somebody that's been trading in the market for 50 years. That'll be it. We'll see you in the chat rooms.